Okay, in this video, we are going to go over what is a lot and how to basically calculate your positions when you are about to take a trade, because it's very important to know how much you are going to risk on that trade. So when it comes to Forex, you're dealing with lots. So what is a lot? A lot is basically the amount of units you want to buy or sell when you're trading the market. So let's say that you want to risk more, you will increase your lots. If you don't want to risk that much, you want to have a small amount, then you decrease your lots. So when it comes to Forex, it's called a lot. When it comes to futures, it's called contracts. And when it comes to the stock market, it's called shares, right? So let's go to Forex real quick. You have the micro lot, the mini lot, and the standard lot. Okay, so the micro lot is pretty much 1,000 units. Mini lot, 10,000 units, okay, or 0.10. Standard lot is 1.00 or 100,000 units. So we're gonna go to the calculator. I'm gonna give you guys this link right here. This is the calculator you can use when you're about to take a trade. So let's say that we are looking at the market and we say, you know what, this market is very bearish. We want to take a straight trade right here. I want to go short right here. So let's say we calculate this candle right here, and let's say that this candle is 10 pips, right? So we go here, and let's say that we want to, risk the mini lot. So when it comes to, risking live money, you want to start with either with the micro or the mini. You don't want to go to standard first because that's more money, okay? So the unit is 1,000 units. So let's actually go to micro real quick to see how much it's going to be per pip. So we're going to go and we're going to go 0.01. Remember, 0.01 is a micro, okay? 0.01. So we put that in here, and it's telling us that it's going to be $1 for that trade. So that 10-point move, right? You're risking $1, okay, on that move. So let's say that you say, you know what? I want to risk more than that. You go to the mini. So that's 10,000 units. 0.10, okay, and that's $10. So that trade, you're going to be risking $10, right? You're going to win $10 on that trade, or if it goes against you, you're going to lose $10. So this is a very good thing to know ahead of time, because you don't want to say, oh man, I'm in this trade, but I don't know how much I'm risking on this trade. Like, that's no way to trade, guys. You have to be organized. So let's go to standard lot. Standard lot is B1, so it's 1.00, oops, 00. And basically that's $100 on that trade. So you're gonna win $100 if that trade goes in profit, or you're gonna lose $100 if it stops you out. Okay, so let's go to another calculator you can use, guys. So I'm gonna give you guys all these links right here. This is gonna help you if you're using a Forex broker and you're trading the indices. You can use this right here, okay, because they have all the pip size when it comes to indices. Now let's go to futures real quick. Futures. I'm using AMP. We're going to go over the brokers later, but basically, let's go to contracts. Now, when it comes to futures, it's very easy. We have the micro futures and we have the mini futures. So right here, the micro per tick, you want to go down and you want to look at the value. So this is per tick. So every time S&P 500 moves up one tick is the $1.25. And these are micros, okay? The NASDAQ, if it moves up one tick, is 50 cents, okay? So if I'm trading the NASDAQ and I know that I'm trading the micros and it moves 50 cents, and let's say that this big candle right here is, let's say it's 20 ticks, okay? 20 ticks times 50 cents. Let's do the math. It's $10. So you're risking $10, guys, on that trade. So that's how you do it. So to me, the futures is very, easy, straight to the point. You don't have to have a calculator. Well, you do have to have the calculator, but they tell you, the tick size ahead of time. Now, this is the minis. So if you're doing the minis, S&P 500 is $12.50 per tick. So if it moves up one tick, that's $12.50. If you the NASDAQ 100 is $5 per tick. So if it moves up one tick, you're risking $5. So $5 times 20. Let's do a math on that. Is $100. Okay, so that's how you do it. Now let's go to the stock market. Okay, so let's say that you want to trade the stock market. All right, I actually found this risk to reward calculator. It's free, so I found this online. So I'm gonna give you guys a link to this. So basically, let's say that you put the amount of capital that you have in your stock account. And let's say that you are buying a stock. So let's say that the stock is $75. And you want to buy that $75 actually, and you want to risk, okay, 75. So you want to risk, let's say you want to risk $1, so 74. And then let's say that, you know, how much you wanted to risk. So let's say you want to risk $100 right here. So now it will tell you how much shares you have to buy. So it's telling you right here, you have to buy 100 shares. So let's say that you want to risk $200, okay, on this trade. So let's do $200. So now see, it changed to 200 shares. So this, how many shares you have to buy is 200. Okay, so this will help you calculate all your risks ahead of time. So you know exactly how much you're risking on that trade, and it will tell you how many shares you have to buy when it comes to that stock. So all these different calculators, guys, I'm gonna give you guys all these links, and that's how you calculate your positions. But it's very, very important to do that because you don't want to get in a trade and you don't know how much you're risking. All right, so let's go to the next video.